What is up, beautiful people of YouTube? It's Carlos here, and in today's video, I'm going to be talking about the top 5 most essential tips for investing in the stock market, so stay tuned for that. But before I start the video, make sure you like and subscribe because it really helps out my channel a lot. Thanks, guys. So, buying stocks isn't really that hard. What's challenging is consistently picking companies that beat the stock market. That's something most people can't do, which is obviously why you're watching this video. The strategies that I'm going to be covering in this video will deliver tried and true rules and strategies for investing in the stock market. Starting with number 1, check your emotions at the door. Success in investing doesn't correlate with IQ. What you need is the temperament to control the urges that get other people into trouble when investing. That, my friends, is wisdom from Warren Buffett himself, who, if you don't know, is the chairman of Berkshire Hathaway, and what other people see him as an investing guru and an OG. Who Buffett is referring to in that quote is investors who let their heads and not their emotions drive their investing decisions. In fact, trading overactively triggered by emotions is one of the most common ways investors hurt their portfolio. All the stock market tips that follow can help investors cultivate the temperament required to have long-term success. Number 2, pick companies and not ticker symbols. It's easy to forget that behind the alphabet soup of stock quotes, crawling along the bottom of every CNBC broadcast is an actual business. But don't let stock picking become an abstract concept. Remember, buying a share of a company makes you a part owner of that business. You'll probably come across an overwhelming amount of information as you screen for potential business partners. But it's easier to home in on the right stuff when wearing a business buyer hat. You want to know how this company operates, its place in the overall industry, its competitors, its long-term prospects, and whether it brings something new to the portfolio of businesses that you already own. Number 3, plan for uncertain times. All investors are sometimes tempted to change their relationship statuses with their current stocks, but making heat-of-the-moment decisions can lead to classic investing no-nos. For example, buying high and selling low. This is where journaling helps. You heard me right, investor journaling. Write down what makes every stock in your portfolio worthy of a commitment and while your head is clear, the circumstances that would justify a breakup. For example, if you're looking at buying stocks, spell out what you find attractive about the stock and the company, and the opportunity you see in the future. What are your expectations? What metrics matter most? And what milestones you will use to judge the company's progress. Write down the potential pitfalls and mark which ones would be game changers and which would be signs of a temporary setback. And when you're thinking about selling a stock, write an investing prenup that spells out what would drive you to sell the stock. I'm not talking about price movement, especially in the short term, but fundamental changes to the business that affects its ability to grow over time. A couple examples of this are a company loses a major customer, the CEO's successor starts taking the company in a different direction, a major viable competitor emerges, or your investing thesis about the company doesn't seem to pan out over time. Number 4, build up positions gradually. The investor's superpower is not timing, but time. The most successful investors buy stocks because they expect to be rewarded by share price, appreciation of the stock, dividends, etc. And all this comes over years or even decades. That means you can take your time in buying stocks as well.
Are you Squidward? That's okay, take your time.
3 great buying strategies that reduce your exposure to price volatility are dollar cost averaging, buying in thirds, or buying the basket. I'll be doing a future video on those 3 investment strategies, so make sure you're subscribed for that. And coming to a wrap, number 5, avoid trading over activity. And I'm guilty of this as well. Checking in on your stocks once per quarter, such as when you receive quarterly reports, is more than plenty. But it's hard not to keep a constant eye on the scoreboard. This can lead to overreacting to short-term events. focusing on the share price instead of the company value, and feeling like you need to do something when no action is needed. When one of your stocks experiences a sharp movement, find out what triggered the event. Is your stock the victim of collateral damage from the market responding to an unrelated event? Has something changed in the underlying business of the stock? Has something changed in the underlying business of the company? Is it something that meaningfully affects your long-term outlook? These are just a couple things to keep in mind when looking at your portfolio and seeing if you want to sell the companies in your portfolio.
Hold up.
Real quick before I let you guys go, if you guys want 2 free stocks, make sure to click that link in my description. Webull will be giving you 2 free stocks when you sign up and deposit your first $100, with one of these stocks being valued up to $1,400.
Oh my God!
So if you want those 2 free stocks, make sure to click that link in my description and comment down below what stocks you guys get. As always, share this video with friends and family if you found it helpful. Thanks for watching, and until next time.